Good afternoon and happy Thursday. It's Alyssa Corum and Ken Shreve here with a look at the stock market today. And on today's show, we're going to be taking a look at Atlassian and Roku as well as the chip sector. But before we get to all that, we need to take a look at the major indexes. So let's do that. It was a down session across the board. The NASDAQ falling about 0.4%, the S&P 0.3%, the Dow losing 0.5%. So down across the board, but well off lows and a key test of support for the S&P and NASDAQ.
Yeah, I think the important thing to remember is that we did close well off lows. I mean, indexes were down well over 1% for a good portion of the session, but the China trade headlines have been very fluid all day. Of course, tariffs on Chinese imports are set to take effect, I guess, midnight tonight, take effect on Friday. So we'll see what happens there. But for the S&P 500, you can see a good test of the 50-day moving average today, and we don't have a chart of the NASDAQ, but the NASDAQ showed similar price action, and we closed well off lows. It's probably going to end up being a mild distribution day for the S&P 500 and NASDAQ, but we'll go with the close off lows as being a positive sign today.
So this morning was a little scary for a lot of people, but it does go to show you do want to see how we end up closing for the day. But as far as distribution piling up and just the look of what we saw today, even though luckily we were able to get such a bounce off of the moving average there, how should investors be approaching their portfolio now?
Well, I mean, definitely cautiously because the uptrend is under pressure, and it looks like the distribution day count is going to increase again today to 5 on the NASDAQ and 5 on the S&P 500. So it was interesting. We're going to talk about the outperformance of some software stocks today, which was good to see. But, it's definitely, when times turn uncertain in the stock market, that's when you need to start playing some defense with the portfolio, considering taking, partial profits in some of your big winners. And I wrote yesterday in the big picture, if a loss is small and the stock is just lollygagging and not really doing much, it's okay to cut that dead rate loose as well and just raise a little bit of cash.
Yeah, don't let it get out of control, those losses. Yeah. All right, well, let's take a look at a few individual names. You mentioned strength in software, and the IBD 50 ETF, FFTY, which comprises of top growth stocks, was able to hold up well today. And a big reason for that was the strength out of software, including Atlassian, which was able to log a nearly 7% gain in heavy volume today on positive commentary. So that stock is just continuing to climb here.
Yeah, it got an upgrade from Goldman Sachs to buy. Interesting that the price target for Goldman is only 125, so it looks like Atlassian closed right around Goldman's price target today. But Atlassian's been a mainstay in the IBD 50 and a lot of our growth screens. Has really long-term track record of good earnings and sales growth. Just a maker of workflow management software. Software stocks very visible what fundamentals are like in this sector. A lot of companies growing quickly like Atlassian. So new high for the stock today, probably a little bit extended at this point. The last time the stock broke out of a base was all the way back in late December, early January. So a couple of trips to the 50-day line looks pretty extended at this point.
But if investors do have a big cushion here with Atlassian, given the market conditions, selling into strength at least a little bit might not be a bad idea.
Yeah, I think with the market acting the way it is, I think that's perfectly reasonable strategy. When you're in the early stages of a new bull market and the stock market is serving up, a fresh round of breakouts, it's okay to let your winners run, and take advantage of a strengthening market. But when you have a market uptrend under pressure like now, playing defense and selling on the way up is not bad strategy at all.
Well, software strong today, but semiconductor stocks getting hit again today. We're going to be taking a look at a chip ETF, which fell about 1.4% today. So We know that participation in the uptrend from chip stocks is key, but between revenue outlook from Intel, perhaps renewed concerns about the back half of the year for semiconductor stocks.
Yeah, so I mean the VanEck Vectors Semiconductor ETF, which we're going to look at today, you can see after today's drop, it's testing support at the 50-day moving average. Now, Intel is the highest weighted stock in this ETF at about 12%. So late Wednesday, Intel, of course, warned on profit margin, weak margins over the next few years as the company transitions out of the PC business into data centers and the like. But Intel definitely a drag on the Dow and the VanEck Semiconductor ETF here, but test of the 50-day right now.
That's right. And we want to talk about Roku as well, which was a big bright spot today on its quarterly earnings report, logging revenue growth of 51%, so accelerating there. It did have a loss for the quarter, but that didn't seem to mind investors with a gap out of this base with a 28% gain in really heavy volume. And it was able to close the day at the top of the range.
Yeah.
So a very strong session for Roku despite the overall headwinds for the market.
I mean, listen, this is a company that operates a TV, streaming platform, and they had, I think, a little over 27 million subscribers at the end of last year. So very popular streaming product. And this was interesting because just after the open, it had not topped that buy point yet. It was up 6, 7, 8%, and people are saying, well, maybe it's going to break out over its recent high of 74.35, and then it did, and people thought maybe a 12, 13% gain in the stock was too much, and it just kept on going. So a really, really strong close for Roku today. It's extended, but pretty clear buy point on the chart here, outlined by that dotted line. 74.45, and really strong move today.
Yeah, that's right. When we're talking about how to handle stocks during earnings season, we want to be looking for stocks that are setting up in bases, and then if they do happen to gap up on the reports, looking at that intraday chart. So it looks like it opened strong and just continued to get stronger, but this one had to have been hard to handle for can slim style investors given the backdrop of the market today.
Yeah, and also the fact the company's not profitable.
That
so
too.
It's one of these companies where you have excellent acceleration and sales growth, and clearly this company is seeing strong demand for its services, but it's still not profitable yet, and it's going to be probably a few more years anyway until the company turns its first profit. But technical picture, very bullish.
That's right. We like to see those strong technicals. All right, everyone, thank you so much for tuning in today. We hope you check out investors.com for all the latest stock market news and analysis. And, given what the market is doing right now, it's also important to keep profit-taking rules in mind. So our podcast this week was all about profit-taking. So Arusha and Chris dove into some of these examples, actually talking about Atlassian. So for all the details on that, make sure you head to investors.com/podcast. The new episode is out now, so subscribe wherever you like listening to podcasts best. Thanks again for watching, and we'll see you right back here tomorrow.